Companies faced a lot of challenges in 2024. CEO departures at U.S. companies hit a record high. The most notable included Boeing, Nike, Starbucks, and Intel. Beyond that, we had political fights and rising public hostility toward corporate leaders. Note the United Healthcare CEO assassination. Given all this, what challenges await CEOs in 2025? Well, joining us now to discuss is Lulu Cheng Meservey, founder at Rostra, and Jeff Sonnenfeld, Senior Associate Dean for Leadership Studies at Yale School of Management and a CNBC contributor. Guys, Happy New Year. Lulu, why is direct communication going to be so important for CEOs in 25?
Well, thank you for having me. So CEOs have basically become the human mascots of their company. People make it incredibly personal, as we've seen with the tragedy around the United Healthcare shooting. People treat the CEOs as the human emblems of their company. They attribute traits to the company that they see in the CEO. We see this happening with Elon. We see it happening with Alex Karp. And so for the CEO to be strategic about displaying that combination of traits that they want to impute to their company is going to be super important.
Jeff, what were some of the best CEO moves in 2024? What can CEOs learn from that for 25?
Thanks a lot. I agree with what Lulu just said, and thanks for the invitation to join you, John Contessa. You know, I've been doing this particular segment, believe it or not, for over 30 years, and it's just really good to take stock of where the last year was. Einstein says, you know, learn from yesterday, live for today, hope for tomorrow. This past year, we've seen that Walmart, Motorola, Goldman Sachs, Bookings.com, Citigroup. These are five that really were underappreciated, that their stocks soared. They did very well, extraordinary transformations. I know we don't have time to get into depth on it today. I actually have a Fortune magazine article that just came out on this for anybody who's interested in it.
Jeff, hold on.
But these are companies that did a great transformation.
Hold on just a moment, Jeff. Sorry, we got some breaking news on U.S. Steel. Our Pippa Stevens has the latest. Pippa.
Take a look at shares of U.S. Steel because they are jumping here after Nippon Steel is reportedly sweetening its bid for U.S. Steel as it hopes to get approval for the acquisition. According to the Washington Post, Nippon has said that it would give the U.S. government a veto over any reduction in U.S. Steel's production capacity. That, of course, is meant to alleviate some of the concerns brought by CFIUS that a decline in domestic steel production could pose risks to the national security of the United States. Now, President Biden has until January 7th to decide whether or not to approve or deny the deal based on those CFIUS concerns. You see there, U.S. Steel up 9%. Guys?
Thank you very much for that, Pippa. Jeff, I know that this is an issue that, I mean, we were even talking about the importance of some of our big industries on election night. Can you talk a little bit about your reaction to this sweetening of the pot for the U.S. Steel?
Yeah, that is pretty exciting news. What's interesting, Contessa, when we did talk about it, we were surprised then, as we are surprised up to this moment, that this is one area where President Biden and President-elect Trump are in agreement. And that's not where, in fact, the labor unions and many others are that are eager to see this as they feel go into deeper pockets, stronger hands with the Japanese ownership. But there's a strong sense that this should stay as a CFIUS, which is, you know, a protected industry like the airlines or others, that we need to have this to be domestically based. And it is this sweetening of the deal is interesting. It will make it more complex. This is definitely going to have to go to litigation. But right now, the U.S. government, both parties are against it. They really want this to stay in U.S. hands. Just the way we're looking at trying to bring chips back to the United States, it would be a bit of a paradox if it flipped the other way. But again, it's certainly in the interest of a lot of key stakeholders to see it go into stronger hands, which was the Japanese hands that will invest in it.
Jeff, thank you for that. Lulu, I want to go back to the conversation that we were having about the CEO environment next year. I mean, when you're seeing such a difficult environment for leaders where with politics, many feel forced to pick a side, you had this big backlash for DEI this year. And that, as you said, they can personally lift or sink share price of the stocks. How does a leader of a company navigate all these new pressures amid, by the way, a lot of AI concerns or strategies that must develop and develop very quickly?
Well, so CEO resentment has already been really high. I think it's going to get a lot higher. I think part of the reason for the turnover has been that the job of being a CEO, while it's paying really well, is unglamorous in the sense that you just get constant hate and vitriol for you and your family 24/7. And that's only going to get worse. A lot of CEOs are going to get paid even better, especially as the stocks of the best performing companies rise. They're going to be under pressure from shareholders and themselves to start replacing a lot of their employees with AI. So AI disrupting the job market is a reality. 2025 is going to really pop off in terms of CEOs. You'll see CEOs making major changes of replacing customer service and sales and a lot of people with AI. It's going to make resentment a lot worse. And the other thing is a lot of the CEOs that are the most interesting, the most watched are CEOs of private companies now. So SpaceX, massive company, I think it's 350 billion valuation. I know it doesn't exactly translate to market cap, but a lot of these companies would be large cap companies. They would be in the S&P 500, OpenAI in the mid 100 billions. Anthropic would be a large cap company, Ramp, Anduril, Scale. These would all be large cap companies, and we don't have the visibility into what CEOs are doing.
It seems like